All right, we are live. Okay, so I am going live today and I'm doing something a little bit different. I am actually going to be going live on my company's Facebook page as well as on the company's YouTube channel. So if you are watching this on either one of those platforms, please let me know which platform you're watching me on, and then also let me know where you are watching me from. So what city are you watching this program from? If you have any questions related to student loans, feel free to drop them in the chat, or if you know of someone who can benefit from today's presentation, please share it with them. If you don't know me, my name is Renee Collins. What I'm going to be talking about today is I'm going to be talking about student loan forgiveness, as well as what should we be thinking about as the government lifts the pause on the student loan payment program. So, as we are aware, many of us are aware that the Supreme Court has deemed President Biden's student loan forgiveness unconstitutional. And then we also know that there are not going to be any more extensions. This fall, student loans are going to be repaid. My name is Renee Collins. For those who do not know me, I am the founder of a company called Retire Ready. Retire Ready is an investment advisory company here in the state of Illinois, and we work with first generational wealth builders as well as entrepreneurs, helping them to think differently about their money and to develop a healthy relationship with their money so that they can save more, invest smart, and build wealth. And not just for today, but for future generations as well. So I'm going to jump right into it. I'm going to talk about the student loan developments. And there have been a lot of developments over the past 3.5 years. And this is just scratching the surface. I'm not even talking about public forgiveness today. It was just so much information that I'm going to go over these topics today, and then next week I'm going to come back and I'm going to throw in some additional topics. So make sure you catch me next week. Come back into the Facebook group and I'm going to go live again and talk about some other developments and some other things that you should be thinking about as we approach the fall. First of all, we know that the payment pause is coming to an end this fall. The Department of Education, they have created a Fresh Start program as well as this On-Ramp program, and I'm going to be talking about that today. I'm also going to talk about the new Save repayment plan, and I also wanted to make sure that I mentioned that there's not going to be any tax liability for any student loan forgiveness through December of 2025. I don't think a lot of people realize that when you have a loan that is forgiven, and it could be a student loan, it could be a personal loan, it could be credit cards. When you have a loan or a debt that is forgiven, the IRS basically looks at that and says that, oh, you have increased your wealth, so to speak. Therefore, we're going to tax you on it. So anytime you have a cancellation of debt, it is subject to taxation. And I remember in 2008, when I was doing tax returns, there were a number of real estate investors who had invested in investment properties, and they had the mortgages on these properties was forgiven. And what they didn't realize is that that mortgage was subject to taxation. Well, the same thing is true of student loan forgiveness. So outside of some exception in the tax law, cancellation of debt is taxed. I wanted to make sure I threw that in there so that people would understand what that actually meant. And then I'm also going to talk about the one-time income-driven repayment account adjustment. So let's get started. So what should we be doing next? Well, Navient is getting out of the student loan business. So Navient, before they became Navient, they were actually Sallie Mae. And I'm sure everybody is familiar with the name Sallie Mae. I know I am. So Navient is actually getting out of the student loan business. They're still servicing some loans, but not as many as they had been in the past. This means that it's estimated that anywhere between 40 to 50% of student loan borrowers are going to have a new loan servicing agency. So I encourage you to log into your account, go to studentaid.gov.gov, and take a look to see who is now servicing your student loans. Then you also want to update your contact information. Just verify that the contact information that they have for you in the system is correct. Your account should also give you information about your student loans, the type of loans that you have, and then also tell you what your payments are going to be on those loans. Now, if you were making payments on those student loans prior to the pandemic, more than likely the payment is not going to change because interest has not accrued on those loans in 3.5 years. So your payments are probably going to pretty much stay the same. So take a look at your account, go into studentaid.gov to see what information about your account, your student loans are in there, and see if you need to update any of your account information or your contact information. Because the Department of Education said that over the summer that they are going to be sending out information about the payments that is due on your loans in October. So the Department of Education is coming out with this on-ramp program. The idea behind this program is that it's going to ease you back into paying on your student loans. So from October of this year until September of next year, if you miss a payment or if your payments are late, you're not going to default on your student loans, nor will your payments be reported to the credit bureau. Although interest will continue to accrue on those loans. So this is, again, a way for the government to ease you back into paying on your student loans. They also have this Fresh Start program. The Fresh Start program is basically a pathway out of default. So if you were in default of your student loans prior to the pandemic, then using this program will help you to start repaying your student loans again. But you have to apply for it, and you have to apply by August 31st of next year. And when you apply, request an income-driven repayment program. So get on one of the income-driven repayment programs because it'll help to reduce your loan payments. And if you're low income, if your income is say under $32,000, it's possible that you won't even have a payment, or you'll have a very low payment. And then how do you do this? So you can go on the website to the Department of Education's Default Resolution Group. You want to go onto their website, Google it. If you're not sure how to get to it, so Google Default Resolution Group, and you can apply for the Fresh Start program either online. Here's the website here. You could also call them and they will accept your application over the phone, or you can even send them snail mail. So if you want to mail in the request, you can do that as well. And if this applies to your situation, then I strongly encourage you to get back into repaying your student loans, because it's going to, of course, improve your credit. And then it's going to, prevent, collections as well as garnishment of your wages. So it's just like the program says, it is a great way to get started, to get a fresh start into paying your student loans and rebuilding your credit. So next, I'm going to talk about the income-driven repayment one-time account adjustment. So let me step back for a second, just kind of talk about the income-driven repayment program. These programs were put into place to help families afford their student loan payments. And so if you went into one of these programs, if you were undergrad, if you had undergrad loans, then as long as you paid on your loans over 20 years, at the end of that 20-year period, your loan balance was forgiven. If you have graduate loans and you paid on these loans over a 25-year period, at the end of that time period, your loans were forgiven. But what the Department of Education realized is, for whatever reason, whether there were mistakes, technical issues, or what have you, there were people who were making payments on their student loans for over 20, 25 years, and they were not receiving any forgiveness on these student loans. So they are right now, they're going to, I think right now until the end of the year, they're going to have a one-time adjustment of your student loans. So they're going to give you credit for the items that I have listed here. So you're going to get credit for any time that you were in repayment status. And if you were in forbearance for 12 consecutive months, you're going to get credit for that. If you were in forbearance for 36 cumulative months, you're going to get credit towards forgiveness. Any months that were spent in economic hardship or military deferment after 2013 is going to count towards your forgiveness. Months spent in deferment, with the exception of in-school deferment prior to 2013 is going to give you, you're going to get credit for that as well. And any time that you had before you consolidated your loans, you're going to get credit for that as well. So if you're repaying your student loans before they were consolidated, they're going to count that towards your forgiveness as well. So this is very generous, but it's a one-time program. So you want to, if you want to know like which loans qualify, it's going to be all direct loans. It's going to be the Family Federal Education loans and Perkins loans that are held by the Department of Education. And that's important because there are some Family Federal Education loans that are not held by the Department of Education. It's also going to include Parent Plus loans. This is also a big deal because Parent Plus loans, in my opinion, are typically like the stepchild of student loans, and they don't typically receive as generous of benefits in terms of repayment as the other loans do. So this is a really big deal. And if you have these Family Federal Education loans, you can become a part of, these loans can become a part of the one-time account adjustment if you consolidate them into the direct loan consolidation program. Contact the Department of Education and they can help you with this. Or if you want to meet with me, you can do that as well, because I do offer a 30-minute free consultation. You can go to my website and sign up there. Now I'm going to talk a little bit about the income-driven repayment program. And the one I'm going to focus on today is just the SAVE program. And that is saving, I have to remember, what is it called? I think it's savings for a valuable education or something like that. That program is relatively new. And it's going to replace the repay plan. So if you are on the repay plan now, then the save plan is going to replace that. You don't have to do anything. If you're on the repay plan, you are going to be moved to the save plan. Now, here are other repayment plans that the government currently offers. And I'm not going to talk about these because these have been in existence for a while. And so you can go to the Department of Education's website and get more information on those plans. So let's talk about saving on a valuable education plan. what is the difference? What is the plan? And how does it make a difference? And we're going to go through the calculations as well. So all federal direct loans are going to be eligible. But remember, if you have those family federal education loans that are not held with the federal government, you would have to consolidate those in order to be eligible for the SAVE program. The SAVE program is going to be phased in. Basically, it's going to be 2 phases. So they're going to start out this year with increasing the discretion, how much of the discretionary income is going to be included, or should I say decreasing how much of the discretionary income is going to be included in determining what your payment, your loan payments are going to be. And I'm going to walk you through that because I don't want to confuse you. And then next year, the plan is going to be fully rolled out in July of 2024. So the monthly repayments are going to be 5% of your discretionary income. And that's for undergraduate loans. And for graduate loans, the monthly repayment is going to be 10% of your discretionary income. And to me, one of the I guess the biggest benefit of the SAVE plan is that the interest is not going to be capitalized. So that means that if your payment is less than the amount of interest, then that interest is not going to continue to accrue on that loan, which is a problem that we have today, or problem that we had in the past. So this is really generous in that interest is no longer going to capitalize on that loan. So here's the formula for the SAVE program. Is going to be your adjusted gross income. And if you're not sure how to get your adjusted gross income, this number comes from your tax return. Take a look at your 2022 tax return, look at line 11, and it's going to have your adjusted gross income on there. And then you would you're going to subtract that from 225% of the federal poverty level. You can get this amount by just Googling federal poverty level 2023 to see what that amount is going to be. And it's going to be the same regardless of what state you live in, with the exception of Alaska and Hawaii. And it's also going to be dependent upon your family size. And then once you get that amount, you're going to subtract it from your adjusted gross income, and that will give you your discretionary income. And then when you have your discretionary income, you multiply that by 5%, and that is going to give you your annual payment for your student loans. And to find out what that payment is on a monthly basis, you will divide it by 12. So here's an example. Let's assume that this person they're single. Their adjusted gross income is $75,000. So we're going to put $75,000 on here, and then we're going to figure out what is the federal poverty level for a person who has one person in their household. And that is going to be $14,580. Multiply that by 225%, and then we subtract that from the $75,000. That gives you your discretionary income. You take that discretionary income, multiply it by 5%, and that is what your annual payment, student loan payment, is going to be. Divided by 12, your monthly payment is going to be $175.81. Now, let's compare that to the repay program. The repay program, right now, it is your adjusted gross income subtracted by 150% of the federal poverty level to figure out what your discretionary income is going to be. And then you take that and you multiply it by 10%, and then you get your annual payment. And then you divide it by 12. So we use the same amount, $75,000, as the adjusted gross income. and then we take 150% and multiply that times the federal poverty level, we see here that the discretionary income to determine the monthly payment is higher. So already you can see that the SAVE plan is a more generous plan. So it's going to help to lower your student loan payment on a monthly basis. So take that $53,000, multiply that by 10%, and here the annual payment is $5,313. Divide that by 12, and you end up with $442.75. So big difference, really big difference. And if you take the two and put them side by side, the two plans, put them side by side, you will see here the impact. So the SAVE plan is really a big deal. It's going to make a big difference in terms of helping families to get out of their, I guess they make the student loans more affordable, which is going to be really helpful in helping families to reduce the burden of having that student loan payment. But remember, the SAVE program is going to be phased in over the course of the next year. If you're on the repay program, you're going to be automatically moved to the SAVE plan, so you don't have to do anything. If you want to be on the SAVE plan and you're not on it, contact the Department of Education and let them know that you want to be on the program. I did take a look at their website, and I did not see how you could actually sign up for it today, but I am sure that as the program gets rolled out, there'll be more and more information about how to get on this new SAVE plan. And remember, it's for all federal loans. Well, guys, listen, that is all that I have for you today. I will be live again next week, and I'm going to get into the public forgiveness. I'm going to get more into that and what that program looks like now. So in the meantime, you guys take care and go be great today. And like I said, if you want to reach me, you have all of my information here. I am on Instagram, Facebook. You have my email address as well as the office phone number. So until next time, you guys go be great today. Take care.